Hey guys, so I just wanted to show you a few trades from today's session. It's July 11th. All right, wow, July 11th. So I got my execution on the chart so you can see what's going on here. So first, let me show you the bigger picture of what we're working with here. We have the volume profile here over the overnight session. So what I like to do with that is I like to look for swing highs, and then I want to confirm those swing highs with a low volume node. So there was a swing high right here. You can see that. Let me send this to the background. And then you can see that there's this nice low volume node. So what I want to do here is I want to look for a reversal in this area. If price quickly moved through here, I can expect sellers to kind of defend their position somewhere between this swing high and this low volume node. So we can zoom in now. Now, the other video I said you want to look for large fair value gaps, and that's 100% true, and I'll show you two great examples why you want to wait for larger fair value gaps. I'm going to call them fair value gaps just for the sake of ICT traders diluting and rebranding the term. It's volume imbalance, right? A fair value gap is just a low volume node. They fight tooth and nail that it's not, it's different than volume profile, but let me ask you this question. If volume profile was different than ICT and what he supposedly came up with, why did he use all volume based and value based terms to explain his things, right? Fair value gap. What is a gap? Well, let's look again at that 1 hour chart. We can look at this volume node here. This is a gap of volume. Fair value gap. All right, stick with me, ICT traders. We can do this. You can do this. All right, you can learn the real terms. You can do it. All right. Think of a balanced price range. Balanced price range would be something like a point of control where you have balanced price. All right, we're getting there. Then you have things like breaker blocks, which I don't even. That is just beyond my pay grade here. I don't. Anyways, so let's go back to the 30-second. Like I said, we want to look for large fair value gaps, large imbalances. This is not a large one by any means. So the plan with this one was I'm going to get in here. You can see this white arrow shows me getting in at 993. So I got in on the close, pulled back a little bit by the time I jumped in. And then what happened was as soon as we're going to sweep this first swing low, I'm going to go break even. It hit that and got me out. All right, no big deal. That was the idea. I know that this fair value gap is small, so the probability is less, so I just want to go break even as quickly as possible. We had a 1 minute, again, this is a small one, so we had this 1 minute here. We inversed it, but we were still within this kind of this swing low here. So I waited for a pullback. I got in once I saw that the fair value gap that we inversed was holding. The imbalance, which was once support, was inversed, and now this imbalance, this fair value gap, is now resistance. So on the close of this, I basically jumped in. I guess I kind of chased it a little bit because 81.75 is down here. And what I did is, again, once we kind of were just sitting around here, I got out at break even. I didn't want to hang around. And okay, actually it looks like, so if I got in here and got out on this candle, I stayed actually through here, hit my break even down here, and then came up and actually tagged me out. Now the bigger play here, which paid off really well, was this 3 minute fair value gap, this 3 minute market imbalance. Again, well, let me show you. ICT, Michael Dingleberry, whatever his name is, says, if you can prove that this isn't my own thing, I'll give you $1 million. Well, he's unfortunately a liar. He's been exposed many times. And so I can clearly show you that imbalances are just low volume nodes every single time that they happen, all right? And he'll say, well, you know, volume profile doesn't show you where the market's gonna go, and neither do the moving average and all this stuff. And it's like, yeah, but you don't even know where the market's gonna go because you fail the Robbins Cup every single time you enter, and you also are unprofitable as a trader. So you don't even know where the market's gonna go, much less the ICT concepts. So my point being here is don't get caught up in the whole ICT being the what would the term be, like the not the silver spoon, but the holy grail. All right, It's not. It's just a rebranded concept that these gurus teach, and they charge you money for it. And it says, and you're like, well, it has a great success rate. Well, if you have millions of people doing something, of course, by statistic percentages, a small amount is going to be profitable, right? If you flipped a coin, if you had 1 million people flipping coins to determine their trade, a small percent is also going to be profitable. You know, I'm not saying it doesn't work, because I use the concept of inversion with it that I learned from the ICT, but volume profile is the same exact thing, and you can use it, and I'll show you how I used it to make my target in my trade here. So we have this 3-minute fair value gap, this 3-minute imbalance here. You can clearly see there's an imbalance right here. There's a BPR, a balanced price range, whatever you want to call it. You can see right here. So this was going to give us a little bit of resistance or support, because there's so much volume transacted here. Buyers are going to be trying to defend this move up. Sellers are going to be trying to defend this move down. So you can see we pulled back. I didn't want to jump in on this at the close, because it was more risk than I want to take. So I put this 9 moving average on here, and basically what I said was, okay, if we pull back to this 9 moving average, I'm going to look to get in. My risk is going to be, I got in at 68.75, so my risk is going to be a lot less here. And so you can see I got in here for 1, 2, so that's 6 minutes. We were kind of going in drawdown, hanging around break even, and then we started to sell off, all right? And so what I did for my target was, you can see there is a 3-minute here, and there's also a 5-minute. And so I determined, hey, you know what? This is a good area for a target, because not only is it a low volume profile or a low volume node, it's also a legitimate fair value gap, right? So I ended up getting out at 50%, and you can see price completely reversed and came back up basically to our entry. So that was a good, fun trade. It was 55 points from start to finish. Really low risk here, a nice RR of 3. And that is why it's worth waiting for the larger fair value gaps, the larger imbalances to be inversed. Because if we're using low volume nodes to look for reversals, then these low volume nodes, these fair value gaps, can work as reversal areas, right? So for instance, what I'm saying is, if we used this large imbalance up here for a reversal, well, a large imbalance down here might work as a reversal. So that's where we're going to want to take profit. And that's why we also want to wait for the imbalance, the low volume node, the imbalance to be inversed before we enter, because if we are closing in the middle of it, it could get bounced out. So once we inversed it, that's the good opportunity. I had another trade overnight with gold. Let me pull it up over here. Now this was at like 11 o'clock my time. I just happened to be awake, so I kind of just got in and got out. And I'm glad I did. I'm absolutely glad I did. So you can see I actually have my take profit and stuff down here, but I decided to get out at 45.9. which is right there. So this was a nice trade. Again, same thing. This is the 3-minute. We had a low volume node coming back from over here. So normally the low volume node's here, but because we had this one and this one hit, I start to kind of creep it up. All right. We had a swing point right above it. Now with gold, it's interesting. Gold, you don't need to always take out those swing highs or those swing lows. If you start to see a reversal going into it, you can take that, because that often happens. All right, so let me zoom in and show you the play. And what I'll do is, let me just mute real quick. Okay, so here, again, just real simple. This is a nice size imbalance in the market. I'm also going to throw the volume profile up on here. All right, huge imbalance from the current session, from the ETH session that I was trading, and also there was that prior low volume node from the prior session. So what I did was, once we got up here, we had an immediate 3-bar reversal. It inversed the fair value gap. It had an increase in selling volume. And that was the sign to enter. So we entered on the close here. And originally I was going to target, here and here, but again, it was 10:30 p.m. my time, so I didn't want to hang out And also on the volume profile, I could see that there's a large block of buyers and sellers right in this area. So I didn't want to try to trade through that because I could be sitting in this position for a while. So I basically took it going in to the high volume area. So you can see volume starts to pick up here. I kind of picked up where you can see a block of volume consistently. So if this is a low volume node, this would be a volume edge, or volume ledge, excuse me, volume ledge. And then this would be a high volume node, low volume node, high volume node, and so forth. So I wanted to sell going into strength, meaning I want to sell it as we're going into it, not until we're all the way into it. And you can see, you know, the target down here would have been hit. The target down here, though, would not have been hit. So I'm happy I took the trade as it was. Just get in, get the target quickly, and get out. And that's how you do it. That's how you use low volume nodes. It's a great way to find where your reversals are going to be, confirm it with a swing point, especially on Nasdaq. On gold, not so much. And if you do that, you're going to have a good time.